Good morning, good night, everyone. Thank you for joining us. I think throughout the presentations here at NOAH, I've heard repeatedly people say, well, there's friction in payments, there's frictions in logistics. And you can imagine if there's friction in payments in developed markets where we have great payment infrastructure, in emerging markets, that's an even bigger problem. And I'm therefore very happy that we found what I think is an excellent panel of people who have seen emerging market payments in many different companies. And I will let the panelists introduce themselves. But I think we have First Data, PayPal several times. We have Amex. We have, you can go on and on. I mean, all the global payment companies are here. And I think the panel, which I think mostly are startups and startup investors, is actually a good sign of how attractive the startup industry, if you want to call it that, has become. Because we have here people who have had leading positions in very, very large traditional payment companies who then all joined startups and are now fighting the payment game in emerging markets, trying to make payments work better. So I let them introduce. Maybe, Gustavo, you want to start. You're far out on the left field.
Okay. Good morning, everyone. As Kai was saying, we all come from different backgrounds, but mostly from the payment industry. So I worked a significant amount of years with American Express and Scotiabank and the financial payment industry. And what we identified was a big challenge against cash. So in Latin America, for example, cash is king, and there's a significant amount of the population that does not have access to credit cards, is unbanked. So we decided to basically create this startup, which is SafetyPay. It's now the largest Latin American network in terms of cash reception points, and we also do online transfers. So that's just like a brief introduction into what SafetyPay does and why I moved into the startup.
Thank you. Ricardo.
Yes. I found Koin. Koin is basically a Brazilian company that it has a business model is the same thing as Bill Me Later, Klarna, and now PayPal Credit, which is the only one post-payment solution in Latin America, and it actually it guarantees the merchant the payment from the customers no matter what. We take the risk of credit and we take the risk of the fraud, and we then charge our client within like almost 10 days, 10 to 15 days after actually the purchase of goods. So. That's it.
I want to interject and say Ricardo was also the founder of MaxiPago, which is one of the largest payment gateways in Brazil, which he then successfully sold to one of the largest acquiring businesses in Brazil. So he has seen payments from various angles.
Yes. I found like MaxiPago. MaxiPago is a gateway that I found like maybe 7 years ago, and we managed to sold MaxiPago to Itaú, which is which controls Rede. Rede is the second largest acquired in Brazil, competing with Cielo, which is basically the largest one. And we performed the sale like last year, still like on like 15% of the business, and still a board member of MaxiPago as well.
Orkun, please.
Hello, I'm Orkun. I am Chief Sales Officer at Iyzico. Iyzico is the leading payment technology company in Turkey, offering merchants to accept payments from all around the world, and also offering all the merchants international to accept payments from Iran. And I think that I need to mention that I worked at PayPal Europe for 5 years before joining Iyzico last year.
Mario, please.
Hi everyone, Mario Shiliashki. I run PayU. PayU is a company that focuses around 16 markets, mostly emerging markets around the world. We also compete with Orkun in Turkey, but other markets are Russia, Poland, Central Eastern Europe. We're number one in India, Latin America, Colombia, also in Brazil, approaching about $20 billion in processing volume. We're owned by a larger group called Naspers, which is a media conglomerate investing in e-commerce and payments companies around the world, mostly in emerging markets. And I also need to mention that I was part of the PayPal alumni network, both here in Europe in the very early days. Was part of opening up the Berlin office as well, so I love Berlin. And also MasterCard right before PayU.
And Stefan, last but not least, he's the odd one out because he worked for some blue chip payment companies, but he couldn't quite make it to a startup, so he has become an investor, unfortunately.
Thanks, Kai. We'll deal with that later after the panel. So I have a long history in payments. I used to work for First Data in Europe, in most parts of Europe, and I'm now partnered with Speedinvest. We're an early stage tech fund doing a lot of fintech across Europe, but also in places like Turkey. So the first fund is investor in Iyzico, together with the IFC. And we do continuously look at, very opportunistically, at fintech in emerging markets. And I'm also non-executive board member since 2009 of Wirecard. And for those that don't know Wirecard, it's a very successful acquirer and issuer in Europe, but also in emerging markets, primarily Southeast Asia, and recently India through an acquisition. Yeah, that's it. Glad to be here.
Great, thank you very much. Why don't we start from the friction point, because that was mentioned here so many times. In emerging markets, I mean, card payments are still large, but unlike in the US, for example, doesn't always work very well. So even if you have high card penetration, that may ultimately not get you there as an online merchant. Mario, why don't you explain a little bit where, I mean, you are probably in the most markets and you are predominantly cards. Why don't you explain a little bit why card payments not always work in the markets where you are?
Well, we start with my previous employer, MasterCard, is trying hard to introduce cards around the world, right, with various programs. But as it is, we compete with consumer habits mainly, right? So we need to cater in all of our markets to the habits of consumers, which is number one, I think, challenge and opportunity for us, right? So as PayU, we focus very specifically in the markets we're in to be the best local provider, which then allows us to integrate into all the different payment options beyond cards, right? So in Poland, we're integrated, as an example, to 26 banks with direct transfer, one-click transfer from a bank account, which has nothing to do with cards, right? So we have to do that locally. Part of it is habit, I think. Part of it is just the nature of the business in the various markets. And also regulation, right? So regulation is one that we need to deal with on a constant basis. Our ex-employer, PayPal, just announced exit from Turkey, which had all to do with regulation, right? So clearly Turkey is a card market, but even with that, you can't always make it work. So being local, being able to compete with local habits and play with regulations, regulators, and adhere to regulations is key.
Ricardo, let's talk a little bit about Brazil, which is a relatively established card market, not as established as Turkey, which is maybe the most technically advanced card payment market in the world. Brazil has very large issuers, has relatively high card penetration, especially in the markets where, I guess, e-commerce is predominant. We spoke about Sao Paulo, which is almost, well, it's the size of many European countries and has the GDP that is similar to smaller European countries, very high card penetration. But you were running a gateway, and then you decided to create a company that circumvents cards and in fact is its own payment scheme. So why did you do that, and why do you think cards were not sufficient?
Yeah, the Brazilian scenario is a little bit different because up to 2010 was basically we had a duopoly of schemes and acquirers. We have like Cielo, which is the largest acquirer. They have a contract with Visa, okay, and we have Ricardo, which has a contract with Mastercard. So they managed to kind of get 90% of the market, which is really big. Of the total TPV of the e-commerce in Brazil last year was almost 60 billion reais, which is like maybe $25 billion. So what I had in mind basically is that when I founded a gateway company, is try to manage to switch to the acquire side. But to face competition with those giants in Brazil is really tough. Now Cielo has probably 54% of the market, and Rede, it has like 35, 36. So the remaining 10% of the market is, we have like Santander and GetNet with 8%, and the newcomers, as I call, like mainly the European guys, and they divided two remaining percent. So to enter in the competition for the acquire piece would be very tough for myself. So when I got an offer from Rede or from Itaú to actually to buy the company, that was a no-brainer for me. And then when I decide to get the model of Koin, which model we are actually the whole part of the chain. We have since the gateway, our own gateway, until the scheme. We managed to give it the gateway. We do the fraud. We do the credit check. We are our own acquirer, I'd say, and our own scheme. So we got a little bit more risk than the acquirers, but we get the whole chunk of the MDR from the merchant. So. And that actually, the post-payment in Brazil, we didn't have any company that was doing post-payment, as we do kind of a mix of post-payment and instant credit. It's a small credit, just credit for the e-commerce business. So I thought that's kind of a hole in the market in Brazil. And because in Brazil, one thing that is I don't think that it has in any other countries. We have a boleto. Boleto is a kind of invoice payment method, and it has a big chunk of the market. We have a boleto. We have like for 20 to 20%, 22% of the whole market is people paying boleto. And when you pay in boleto you have to pay in advance, and then actually you trust the merchant that will deliver the good, as you say, and then actually. I mean, you have to pay in advance. You have to actually trust a lot in the merchant, and the merchant itself. It only released the good actually when he saw the money coming into his account. So we have a huge drop-off rate of boleto in Brazil as well. We have almost 60%. So what we do at Koin, actually, we try to solve the problem with boleto. So it will be the same boleto that actually the client pays, but it will be a post-payment. And as we guarantee for the merchant that we actually will receive the money, the merchant actually don't have to be aware of the huge drop-off rate that occurs there.
So as I understand it, boleto is essentially, it's not a post-paid, it's a prepayment. So you buy something, you generate the boleto, then you pay in cash somewhere at a bank, and then the merchant will deliver the goods. So the merchant has to hold the goods until the boleto has been paid, and you change that. You say, okay, I'll guarantee you that the boleto will be paid, so you can ship the goods. So I guess that improves the conversion rate drastically, because you don't have the impulse buyer then needing to go with an invoice to pay somewhere in cash, correct?
Yes, absolutely. And The merchant actually has to wait until the time to wait to 6 days actually to see if the money actually get in accounts, and within the period he has to put the good actually sold aside and not perform the sale. So we have a huge problem for the merchant that we call a bulletization problem. That's a kind of a fraud that all the competitors, once you get close to some special dates like Black Friday, when you get to Christmas, etc., some of the competitors, they actually go to the website and they click the boleto, and then they prevent the competitor to actually perform the sale on that good. That is a huge. I mean, we have one of the largest merchants in Brazil are the FIDI, the one that IFC invested on also. And I was talking to the CEO of the FIDI, and he said that they the problem with the bulletization for them was 200,000 reais per day. Like it's almost $70,000 per day for that bulletization problem. And we try to manage to avoid that.
One thing that is often said is that most of the newer online payment methods ultimately don't compete with each other, they compete with cash. I think that was probably true maybe some years ago. I mean, from our perspective where we invested in different ones, we think there's now also a pretty large degree of competition between them. I mean, Gustavo, one could say that you started out competing with cash by offering direct-to-account payments, like from account payments, and then you gave up and you started to offer cash payments for e-commerce, to put it in a not so nice way. But what made you do that conversion? Why did you ultimately decide, okay, cash payments? And I think cash payments for you are growing more than the actual bank account transfers. I mean, what triggered the change?
Okay, what we identified is our first focus, as Kai is mentioning, is we did direct transfer for the banked customers. But if you look at the demographics within the bank, the number of bank customers that have a credit card that would use the credit card is significantly higher, and they're willing to use their credit card instead of doing the transfer. So even though it's a segment that's growing, I would say it's not growing as fast as cash. Going to the example in Brazil, what we found is that 55 million people are unbanked and they don't have the means to make payments either with credit cards or through a bank account. And that's why we decided to move into the cash portion. Mario was mentioning on the card processing side some of the issues that merchants face. And in Brazil in particular, if you have a credit card and you cannot actually, if you don't have an international credit card, you cannot do a cross-border transaction. That was an opportunity that we found. And so we created a global clearinghouse through which a consumer can do a direct transfer or can make a cash payment and then buy abroad. And that's where probably 40% of our volume comes from. The other thing that we identified in the cash network was several deficiencies, as Ricardo was saying. One is the posting time, the notification, how the retail or the bank network report the transaction. It takes from somewhere between 24 hours all the way to 7 days to notify. So what we built with the banks is the ability to do online real-time confirmation, and what that does for the merchant, it reduces the time through which they manage the inventory. It improves the reconciliation timeframes. It improves the posting of the transaction, generates a much better customer journey. So it actually enables for a much better customer experience when they're paying.
It sounds like you make a pretty good living of card payments that didn't work. No, somebody tries to buy something with a card that is not approved for an international transaction, or that gets caught up in the fraud protection of the bank or the gateway or the acquirer or whomever. What percentage of cash and account transfers that you do result from failed card transactions with merchants?
Well, I'll step back. Let's say if it's a domestic transaction and it's a merchant within the travel industry, they'll reject somewhere between 14 to 20% of domestic transactions. We're recovering close to 40% of those rejected transactions. If it's an international payment, let's say a Brazilian or a Mexican buying with Air Europa or with an international carrier, the rejection, it's even larger. It gets up to 40%. And in some cases, we are able to recover up to 60% of those international transactions. So by creating a model, not only in terms of promoting sales, but also looking at the deficiency of the process, we're able to basically return some of those sales that had already been made and get the customer to pay. The other thing we do is we've created solutions for all of the digital channels. So we not only focus on e-commerce, we also service call center sales, and we have mobile applications like the one for Aeromexico, Peruvian Airlines. So we enable all of the online transfer and cash transactions through those channels.
I want to pick up on one point that several of you mentioned, and I think that's the deal that merchants ultimately get in this payments. I mean, several merchants said, I don't want to worry about payments, I want this to work, I want to have high conversion rates, so I want someone to solve it for me. And I think yesterday there was a presentation from Adyen that essentially pointed out that's really their major strengths, and I think it's ultimately the strengths of many PSPs and other providers in this industry trying to make this work. But it's not only that there's friction in the process of making the payment. I think there's also friction in other parts of the relationship between merchants and card schemes. For example, the settlement period. Ricardo, why don't you explain a little bit how that works in the US, which I think that's another differentiator for Koin between the card payments. How long is the cycle for a settlement between the card schemes, Visa and MasterCard, and a merchant in Brazil typically?
30 days.
30 days?
Yeah, 30 days. Historical, actually, I think it's due to the historical hyperinflation that you used to have in Brazil, and that's why Visa and MasterCard, they continue to put them on the merchants, and now we have 30 days, mainly 30 days. You can, if the merchants want actually to advance that, we charge different rates to advance it, but basically it's 30 days. I do believe that with the new competition that has been arriving in Brazil, with mainly from the new acquirers that from Europe and from America as well, I think that this timing will be like they are going to try to diminish this and as a kind of step in and try to compete with the acquirers that I mentioned before, the huge one. But basically, it's 30 days, and the merchants are doing pretty well with that, I guess.
Let's get back to the card payments and maybe talk a little bit about Turkey, because it's very different, I mean, to Brazil. It's also one of those e-commerce markets that everybody has been looking at, and has been always, everybody's waiting for it to take off wildly, like Brazil, I guess. And I think maybe in both markets it hasn't taken off as much as people expected, maybe even less so in Turkey than in Brazil. And in the old days, when you would ask people, well, what makes a good e-commerce market, and you would think about investing, and maybe Stefan can also comment on that, which future e-commerce market would you invest in? People always looked at how many people are online, and mobile smartphone penetration and so on. I mean, you have now a lot of market where you have a lot of people online, you have very high smartphone penetration, but you still have very limited e-commerce. And I think that actually indicates weaknesses somewhere else, and I think it's mostly payment infrastructure and logistics. So we are now facing not the obvious problem anymore, we're one level down, maybe at a more operational level. So how's that in Turkey? How's the relationship between merchants and the card schemes, and what are the main friction points?
I think that let me start to say that accepting payments is the visible part of the iceberg, especially in emerging markets. As you know, Kai, especially our background, I lived in France, Barbaros, our founders, they lived in Germany, they grew up and lived in Germany, and we were exposed to Western countries' best practices on e-commerce and payments. Then we went back to Turkey for Iyzico, and right now we try to apply these global best practices into the local market, which is really important. We are a payment technology company, and accepting payments is only visible part of the iceberg. The biggest part is all the services around the payment. And we need to support our merchants in order to solve their specific problems. Like, for example, marketplaces. We are trying to, in fact, we are solving their settlement problems. We automatically settle all their sub-sellers. Or insurance companies. The credit card number are not hitting their servers, so they don't need to worry about PCI DSS license. Small e-commerce websites, again, the hosted form helps them to save credit card in our servers in order to propose a better checkout experience. So what we see, we are not only a payment company, but technology company, helping them to improve their technology, which is very important. For example, one small example, 2 weeks ago, we helped a startup, a Turkish startup, to change their mobile app architecture in order to increase their conversion, which helped them to increase 20% of the conversion. So if you are only focused on the processing, I think you are not helping your merchants in emerging markets. The other side, we are helping them to grow their business by telling them they don't need to sell only to Turkey, but they need to sell cross-border, because we all discuss about cross-border transactions. I was really impressed by Klarna CEO Sebastian, who thought next big thing for him is the cross-border transaction, not fingerprints, not all this fancy technology, but cross-border transactions. Because of that, as you know, we have launched Iran. So all the Turkish merchants, they can accept payments from Iran, which is a huge card penetration, 92%, and 80 million people, 221 million set-up cards, local card scheme. But it won't stop only Iran. We are helping to sell to Western countries. We will add more local payment methods in order to help them increase their sales. So we cannot be only a payment company, but we need to be a technology partner of our merchants, especially in emerging markets, to help them in all the aspects of the e-commerce.
Mario, I think you run probably the most international company on the panel here. Do you see the same problems also in other markets? Would you say that's a common problem, or is every market very different and the problems are very different in each market?
It's tough to generalize, especially around emerging markets, right? So problems are different, but what Orkun just said, I think holds true for all of our markets, right? We need to serve our merchants in a much broader way than just payment processing or or card acceptance, right? Which is why we have to do the local payment methods in each of the markets, local schemes if they exist in each of the markets, and more local schemes are coming, whether it's Turkey or Russia or Poland, Boleto in Brazil and so forth. So for sure that problem exists across. It exists also in developed markets, right? Companies that focus on a broader set of issues that the merchant face generally do better. And I think what you said, Orkun, about helping merchants grow to beyond their current market is clearly the path forward for all of us in payments, but beyond that in e-commerce, mobile commerce, and so forth. That's why we believe at PayU, at least, that being in a multitude of markets is part of the winning strategy, because ultimately scale is needed, right? Payments is a scale business, and you may not be able to attain as much scale in one single market, right? So being able to optimize across different markets and take our merchants with us to our markets, and then through partnerships to additional markets, including Western markets, is going to be the key.
Stefan, you're an investor in several PSPs and other payment companies. When you look at this space, I mean, you invest in Iyzico, for example, what attracts you to e-commerce or online payment companies? Is it the friction points, is it market size? What ultimately catches you?
Well, I would like to take up Mario's point. I mean, we have friction in electronic payments everywhere in the world, including the developed world. I mean, I'm based in Vienna, Austria. I mean, this is a very arcane, sort of old-style banking-driven payment market. So there's huge opportunities in developed worlds. Just think of PaySafeCard as an example. 2 Austrian founders actually coming up with a cash voucher scheme for young people playing games. And this is like started in Austria. They went global and successfully sold the business. But it just shows that in payments very often it's about finding the right niche, finding a use case where there is big pain point for merchants and or consumers. So there's various ways to attack it. I think the gentleman just mentioned a few examples. They're quite different in each country, but it's at the end it's taking out friction. Of course, for the fund, what is interesting is ultimately the ability that the mobile brings to consumers and merchants to reduce that friction dramatically, and that of course includes not only features like subscription payments and the like, but also advances ultimately. We're always talking about taking some sort or giving some sort of credit line. It could be extremely short, it can be quite long, and that's ultimately the way to make money in payments is lending and FX, right? I mean, that will never change. That's always been the case. And so as a VC, you look for those opportunities. Of course, depending on the size of your fund, it might be enough to go into one particular country, but of course, those cases where, I mean, we particularly like those cases where you start with the online acceptance, and then you move to the consumer. And I think you know that as PayU perfectly well. That's a beautiful game because the customer acquisition cost on the consumer side is significantly lower than trying to market a wallet to a consumer. So those are great models, and if you can achieve to put some sort of quick credit line in there, and your scoring works, of course, and then that's a beautiful business. Yeah. And maybe just a couple of words, sort of putting my Wirecard hat on. I mean, Wirecard is a pretty good example, probably similar to PayU. Obviously, it's all about being able to serve more and more global merchants in many regions of the world, ideally globally, which is really difficult. I don't think anyone can say, including PayPal, they can do that. It's super difficult. So there's a very long way to go for those companies. And then it's for strategics, it's obviously very different for a fund. It's a lot about M&A, and then doing smart M&A, i.e. buying at the right price, and being able to leverage those local assets beyond just their local abilities. And I personally, obviously, am only going to say positive things about how Wirecard has done it, but I really think we all know this from M&A in any industry, that too often those local assets are not leveraged in the right way. They vest and they leave after 2 years, which is never a good thing. And I think they've done a pretty good job of keeping those people, giving them more responsibility beyond the local level, and using their skills abroad. So I think this M&A and integration aspect is pretty important, especially for the corporates. Yeah. So a lot of topics. Sorry.
Mario, you wanted to follow up? Yeah.
Just follow up. I think you touched on a point that I just want to underline. In all markets, right, developed or developing, one common thread is access to money, right? So both consumer and SMB, you're living it, Ricardo, right, with basically extending credit to merchants. Extending credit to the SMB especially, that in most markets is very underserved. And tying that with a payment mechanism that helps them actually sell online or via mobile or via cash, right, is key. And then on the consumer side, of course, same thing, right? They want the product, they may not have the money or may not want to use their current line of credit. which is where, especially in emerging markets, is a massive opportunity. So tying those two together, I think, like you say, that and FX probably is the way to grow, yeah?
We invest globally, so we try to have some global overview to the degree that that's possible. And the number of companies that we now see that offer credit to either consumers or merchant or somewhere in that ecosystem is incredible. I mean, I would say 5 years ago there was almost none, and now there's almost no payment company left, PSP left, that doesn't at least think about offering credit along, maybe instant credit like Koin ultimately does, or various other things. And there's partnerships. PayU has a partnership with a company called Creditec, where we are also an investor to do instant online credit at the point of purchase, which ultimately gets you in a very similar model to what Koin does. And I do believe that will be a huge differentiator in the future for merchants, in particular in emerging markets. Now, if you think about the settlement cycles in some of the countries, I mean, what happens in Brazil, and maybe you should talk about that a bit more, the settlement cycle is so long that ultimately the merchants are cash strapped and then need to find another source of capital. And I think the way this works in Brazil is an amazing example of a lack of competition. But why don't you tell that?
Yeah, we have, like, as I mentioned, we have like this actually the main is 30 days for the settlement cycles. And when you're talking about credit in Brazil as well, we have the interest rate actually that we charge, not from the clients on the other end, actually are so high that just this line of revenue, if you see in any lending companies, like nowadays it's like 500% per year on a compound basis that most of the credit card companies they charge to the clients. And the parts of just to set up with the default rate that you get. So I think that the lending business per se has a huge space to grow, especially in Brazil, in the Brazilian market. And as you mentioned, the settlement cycles actually that you have of 30 days, that's pretty common in Brazil as well. And we have, like, as you mentioned, of the SMBs, most of the merchants, of SMBs merchants actually, we need money in advance. So we usually charge another rate for them and maybe it's like in the areas of 3% for them to advance and to get this, like to pay in 2 days or something like that.
So if I understand it correctly, many merchants in Brazil ultimately, as you said, they need to borrow money because the settlement cycle is so long, and in many cases they then go to the acquirer who gives them the long settlement cycle to borrow money from them. So not only do they pay the MDR, but in addition to that they also have to pay for the money that is withheld.
It's a win-win situation, actually.
For the acquirer, yes, not so much for the merchant.
Not for the merchant, yeah.
Indeed. And maybe we can talk a little bit, I mean, we need to get some merchant perspective. If you're a merchant, you want to get into any of these markets, you're thinking, okay, there's a huge opportunity in Turkey, it's a huge opportunity in Brazil, or Iran, for example. Let's talk about Iran in a second, because one of the very few remaining white dots on the map, nowhere, because of sanctions and regulation and what have you, it's a huge market, very high card penetration, very many people online, should be an amazing e-commerce market, has not happened, mostly as for political reasons rather than economic. But if you're merchant wanting to sell into Turkey or any of these markets, or to Iran, I mean, you're one of the few people who can offer payments into Iran, what would you consider when you look at this? I mean, here there's 4 different payment methods, and there's probably 10 other out there. What should a merchant do to ultimately pick a PSP or an individual payment method to be successful?
First of all, local payment methods is really important. For example, in Turkey, like in Brazil, the banks are really strong, especially on issuing side, and they have these local card families which proposes installment options to the buyers. And in online, we see that 55% of the payments has been done with installments. Don't get me wrong, all these cards are branded Visa or MasterCard. So if you are an international merchant selling to Turkey, and just to give you the number, Turkish buyer has spent $1.5 billion last year to the website outside of Turkey.
Wow.
So the opportunity is there. So what we try to explain to international merchants, these buyers, they choose 55% of time to pay with installments to the domestic websites. Then they pay to their banks in 3, 6, 9 times. So I think that the international merchants should propose exactly the same option to their buyers in order to be customer focused. So because of that, they need to work with a local payment company. On the other side, these local payment methods acceptance is really important, and we started to work with some, especially e-retailers on apparel side. Their conversion increases dramatically. It's unbelievable. And on the other side, we looked at the opportunity at Iyzico for Iran 1 year ago, almost, when the nuclear agreement has been signed. If we can help Iranian buyers to buy abroad. And when we look at the numbers, the domestic market is 18 billion USD in 2015.
In Iran.
In Iran. The online penetration, population 80 million, more than 50% are connected, and 92% has a debit card, which is called Shut Up. That's the national card scheme. And there are 231 million cards. In Turkey, there are 180 million cards. So we had a partnership with PayU in order to propose right now to the Turkish merchants who are selling to Iran to accept payments with these Shut-Up cards. Just to give you an example, for example, we are in integration with a apparel website in Turkey who has 50,000 visits coming from Iran to their English website. The website is not even localized for Iran. So the opportunity, our merchants, even our small merchants, are asking us to help them in order to start selling. And we have also established a logistical partnership with a shipping company who will help our especially small merchants to sell Iran. And then we will scale this value proposition, Turkey, Iran, 160 million people with 400 million cards, to some other international merchants. The important point is to highlight accepting only Visa, MasterCard doesn't solve the problem. Turkey is the great example for this one.
Mario, you look eager to tag on to that.
Yeah, I think beyond the local payment methods, right, it's solving the merchant problems with local licenses, local offices, logistics, as you said, right? So many of us are focused on, how do we process merchants in Brazil when, they don't want to be setting up an office in, well, Brazil is probably a bad example because everyone wants to have an office in Brazil, especially before the Olympics. But places like Peru, right? It's a decent market, but not huge. You still want to process and accept payments from there. How do you do it as a merchant without actually setting up an office and having local employees and local licenses and stuff like that? So, as a payment technology company and payment provider, we do a lot more than payments to help our merchants process in all these markets and accept payments in all these markets beyond just the local payment methods.
Stefan, please.
Yeah, I mean, you mentioned that the last 5 years sort of advances in credit online has increased a lot, and the amount of companies doing that. I mean, it's obvious, again, I put my VC hat on, that we just have now, or our founders have an amazing amount of data at their fingertips, and that allows them, especially the behavioral data, allows them to do all these things. And this is not just to score somebody if you want to give them an advance or an installment plan, but also let's think about fraud. The new generation of fraud and cybersecurity startups popping up everywhere in the world, and of course I'm going to advertise the ones we invested in, which is called Frogster. Those guys obviously allow, take completely the friction out of, these 3D secure verified by Visa and other methods that simply kill conversion. Yeah, all of us have done this. I mean, we all in this room probably have very good credit, and still there's billions and billions of merchant volume that didn't happen because the existing fraud systems are just not granular enough. And so the new generation dramatically increases purchase volume, again taking out friction ultimately. So let's, there's many ways to ultimately take out friction on a domestic and an international level. I mean, that's ultimately, I think, what we're all working for.
Gustavo and Ricardo, you can tag on, but when you both deal with fraud actually in different ways. So Ricardo, you take the fraud risk and the payment risk from the merchant, and you essentially underwrite it by scoring the customer. And Stefan was mentioning the data, and I guess without access to big data, you wouldn't be able to do this. So how hard is this? I mean, in Brazil, where you have credit bureaus that work so-so, but I mean, ultimately you take all the risk. No, you said, you tell the merchant, I will pay you no matter what, as long as you deliver, and then you underwrite the remaining risk.
Yeah. The credit risk, I mean, the fraud risk is not, if you see the percentage of frauds in Brazil, that it's like 50 basis points per year of fraud is not that much. But the credit is a big point, because in Brazil you have something like, you have credit bureaus, but they are so expensive now, and they only do a negative check for you. So you don't have a positive background of the people. So you have to try to, and basically almost 0.5% of the population in Brazil are somehow tagged and flagged in all of those bureaus that you have. So they are not that efficient. So you have to manage in the credit side to get this piece of information, but along with other algorithms and all of things and rules, etc., that we manage, and we have to take the bureau information into account. But if you just rely on that information, you won't be doing business and credit business in Brazil.
Gustavo, I mean, in the way you operate, at least from the bank account transfers, there is almost no fraud risk. I think you also wanted to comment on the previous point. Go ahead.
Yeah, one of the needs global merchants have is how do they deal with cross-currency exchanges, the loss related to foreign exchange fluctuations, which is significant in our markets. So what we enable for those global merchants is the tranquility they will receive their payment in the currency they issue the ticket. So the end consumer is actually carrying the burden of the foreign exchange cost. They pay in the local currency, and as a company, what we do is we're able to settle in any country, in any currency on behalf of the merchant. So that reduces a significant amount of loss related to hedging costs, foreign exchange transfers, and dealing with that sort of issue. In our case, and one of the benefits we provide to merchants is we are chargeback free and fraud free. So we underwent a significant analysis on the airline industry, for example, with Booz Allen, and we looked at the discount rate average that was being charged to the airlines. Then we inputted into the cost the fraud losses related to the operation of credit cards. We also inputted the fraud-related expenses and administrative expenses of dealing with all the transactions that are being processed through credit cards. And in the end, those are hidden costs that the merchant is not seeing. So they're already spending on it, but it implies that if they take the discount rate, let's say at 2%, they will end up spending between fraud and administrative expenses up to an additional 200 basis points just in handling the operation. So that for us is a key selling point for the merchant.
Let's talk a little bit about mobile, because that's of course a big topic, mobile commerce in many markets. What happens online is now more actually online through a mobile than anything else. Do you think that mobile commerce requires its own particular payment solutions, or can you solve it with the same solutions that you use for browser-based online commerce? Why don't you start? You have the mic anyway.
In emerging markets, the big issue on mobile, it's connectivity to the telecom. So that generates a lot of friction with the end consumer. So a lot of the merchants are moving to native applications, which is key for them to be able to enable the transaction. Now, having only cards on the mobile front, it's one-click sort of access. However, it does not cover all of the population. If you see the penetration in terms of mobile phones as well as smartphones in all the Latin American countries, the smartphones continue to grow at 2-3 times the average that the banks are acquiring new customers. So there's a big opportunity. There's a big shift in terms of many merchants trying to do push marketing efforts on mobile. So for example, selling for airlines ancillary products, baggage, upgrades, things like that. And then that's where we come in as a payment option, as an added value in the mobile solution so that consumers can access the services that the merchant is trying to provide.
Mario, you aggregate payment solutions, so you have a lot of overview of the demands of merchants have in mobile commerce. Do you have a lot of mobile-specific offering?
We do, and we're continually developing it. Mobile for us is a crucial channel, both for kind of a replacement for e-commerce, right, as e-commerce goes on mobile, but also as a way into offline, as offline becomes more and more via the mobile phone. So beyond the specific payment solution, also mobile also allows us to get into a smarter way to collect data and then use that data for conversion, for offering the right payment choice, and also potentially providing a better solution around credit. So working with companies in markets like Africa, where telco data is so rich beyond just the kind of geolocation and so forth, but also given that in that market at least there's such a prevalence around mobile money, and those are generally tied to the same mobile account. The data you can get, upon which then you can provide access to credit or the right payment choice, becomes a real competitive advantage if we can crack it. Let's see if we can. But there, I think mobile provides not just, like I said, a way to convert payments better, but also to completely transform the payment options that we provide, especially around credit.
Orkun.
Yeah, especially in Turkey, we see that mobile commerce is lagging behind of the Western countries. Yesterday, we were discussing with Nazım, founder of the Getir, a mobile app in Turkey for the delivery service, which is one of the most successful one last year. Even he was saying that, you know, mobile commerce is right now is very, very low. The percentage of mobile commerce is very low in Turkey. Hopefully, we are seeing more and more mobile-first companies or mobile-only, even mobile-only companies. And for these ones, your solution, in fact, is very important in order to help them and to propose the best user experience. Even though we are a B2B company, we need to help our merchants to change their point of view on the mobile commerce, especially on the user experience. We need to help them on the payments to propose the best experience. And sometimes we also see we show to our merchants who doesn't have a mobile responsive website to see how, if a user can go until the checkout experience will be mobile responsive. So they help them to understand the importance of the mobile in order to switch or in order to make the necessary effort to switch their commerce or to add this mobile channel too. So it's very important to support mobile app, mobile web, all the mobile channels with the same solution. And especially the experience on the mobile app even though for the startups, it's a game changer.
Ricardo, and then
No, yeah,
Stefan
I'm just.
for famous last words.
Everybody knows about the mobile and how could be helpful for fraud purpose, etc. I mean, I agree with Gustavo that the opportunity is huge, mainly in Brazil. Brazil, if you see, like, you have like almost 250 million people, and we have like 53% of that with smartphones. But if you see the percentage of actually transactions done through mobile, it comes up to 10%, just 10%. 90% still are like in desktops, etc. So the amount of people that actually has smartphones, it's a huge amount of we have a huge opportunity to go in that path.
Stefan, you're by far the oldest. You have the last words.
Okay, two things to settle the second one after this panel. No, I just felt, yes, the penetration mobile is still low in many of these markets, but as that penetration grows, I think also the user experience would greatly advance. I mean, we have to expect over the next 5 years, maybe it'll take 10 years, who knows, a much more sort of personalized, advice-based consumer experience where we simply, I mean, you can do this on Messenger already and just basically maybe speak in the car to the SIM card basically and telling Siri to purchase roses for tomorrow and deliver it to a certain address. And of course, that again is an opportunity but a big threat for the existing payment players. You have to be able to deeply integrate with that kind of experience, which is going to be super challenging. But I think this is not going to start in the developing, so-called developed world and then move into emerging markets. I think a lot of those things will pop up in certain emerging markets, maybe even first. So I think we as entrepreneurs, corporations and investors have to be ready for that. Yeah.
Great. Well, with that, I want to thank you very much. I know you're all busy. Some of you came a very long way. It's great that you were willing to open your books and enlighten me and hopefully also the audience. Thanks a lot.